Hello there, Maverick traders. It's Rob and Ankit again, and you know what it is. It's the Currency Room. We are now into the fourth week of September, and we're going to have, I guess, 1 or 2 trading days in the month next week, but then we're going to wrap up September and look on to the fourth quarter. In this session, we're going to look at the news, look at what happened last week. We'll take a look at what happened in the broad markets, and then we're going to score all of our currencies from +3 to -3, and that's going to give us where to hunt, and we're going to look for some setups.
Disclaimer. This video was created for professional Forex and crypto traders. Maverick Currencies is a proprietary trading firm that employs professional traders around the world. Our traders trade firm capital and keep 70 to 80% of profits they generate. All trades and analysis in this video are for professional traders only. If you are interested in becoming a professional Forex and currency trader for Maverick, click the apply button in the video description. Let's get ready for next week.
First thing, we saw equities break out to new all-time highs. So the Dow broke out, I believe, on Wednesday to new all-time highs. Sorry, no, that happened on Tuesday. And then the S&P broke out right after the Fed meeting, but couldn't hold on to it, and then had a nice recovery on Thursday to push it out to close at new all-time highs. So equities are doing the best they've ever done. And, Ankit and I were both very bullish last week. We both thought that we were going to see this happen. So the question is, where do we go from here? The FOMC came out last week, cut by 50 basis points. And it was a kind of a strange day on Wednesday because we got the initial, we're really happy about it. And then the market didn't have any follow through whatsoever. And we actually saw bond yields go higher. We saw the dollar rebound quite a bit. And it really took the wind out of this, what was supposed to be a rally. And equities ended up closing at the lows on Wednesday. Ankit, what did you think of that Wednesday price action after the report?
Hey, Rob, I'm glad that you brought that up because, that was quite an interesting price action. But again, everything kind of fit in line with buy the rumor, sell the news sort of a thing. Everything was already priced in. I think market did a great job in the last 3 weeks, just pricing that 50 basis point cut into the market. So that was I wasn't surprised with that. But I think what I was more surprised with is that trade, what we saw by the end of the day was reversed overnight. So we had the yield sort of, went up. We had the markets sort of went up and then went down. And then by the next day, the equity broke out. The yields were down again. The dollar, which lifted up, was down again. So it was pretty much a mixed bag. That 24 hours where we're kind of mixed bag, where we got that initial move like a textbook, but then later on that was pretty reverse as well. So overall, again, interesting price action, but nothing as far as the fireworks goes because it was all priced into the markets.
And after the day of the Fed meeting, we kind of ended on our low, and then for about 4 hours, the market was kind of soft as far as futures go. And then we got the Japanese market opened, we got some of the Asian markets open, Hong Kong, and they all rallied huge. And Ankit, didn't you mention that there was some rate cuts in Asia?
Yes, I did read that. Again, it was not one of the major banks, but then we had the Hong Kong, we had Korea, some of the other smaller central banks start to cut rates pretty much this overnight as well. But good point that as those markets opened up, we had Nikkei, which has been under pressure, rose up like 3%. So all the broader markets across overseas started to rally, which again sort of supported, the initial premise of the rate cut. So I think that's really what happened where, we got the selling on the news, but then across the world, we're happy about the news.
Absolutely. The overseas markets really kind of saved the day on this one. And then let's talk about cryptos. We saw a crypto rally start up about middle of the week, or actually on Thursday. We got a nice little rally on Thursday, Friday. So we'll take a look at the cryptos and see if they are tradable. For me, they have not been tradable for about the last couple months. So I'll be excited to see if there's some decent trades that we could put on in crypto. All right, last week, let's kind of just go over some of the economic news. We got CPI out of Canada, weaker than expected. The CAD has been one of the weaker currencies, and this kind of report is not going to help it out. Most likely, this is going to say to the Bank of Canada, you can just keep cutting rates. Just keep cutting rates. We also got the CPI out of the UK. That was as expected. So we'll see that the pound was one of the better ones this week. GDP out of New Zealand was only down 0.2, better than expected, but still down. And then Aussie employment. This is the report that I really liked, and this was my best trade of the week off of this here. Aussie yen for, again, the great employment report, but basically twice as many jobs as they expected. Had a nice run. We heard from Bank of England. They kept rates where they were. And then we heard from Bank of Japan. They kept rates where they were as well. So look, let's jump into the numbers for the week because all of that news really helped things move. So if we just take a look at equities first, we'll see that equities were up about 1.5%. Cryptos, nice week in cryptos, up 6%. Gold continuing to just chug higher. Gold is hitting new all-time high after new all-time high, looking really strong. And oil's been down, definitely from its highs this year, but bouncing off the bottom here, up 3%. If we take a look at the S&P, clear breakout, and we saw that on Thursday. It was a gap up, but it held. Gap up, and then you had a little bit of green candle saying that even with a big gap, a 2% gap, people still wanted to come in and buy. And then take a look at Friday's candle. We came all the way down, and then the buyers came back in. This is indicating indicative of a market that's strong, that wants to hold, but is probably a little bit low on gas for the moment. We had the breakout, a lot of energy off of this low. I don't see any reason why we don't just hang out up in this area. Maybe we just creep a little higher. This market is looking like a moderately bullish market at this point as we break out to new highs. We take a look at what happened in currency land. The yen was the weakest. Now, last week in the currency room, we were looking at all the currencies, and the yen was actually the strongest currency. And I remember saying, look, I don't want to go long yen. I don't think long yen is the right play, but it's clearly the strongest at the moment. We'll take a look at the yen chart, and you'll see that it definitely has changed. But outside of that, there were some really good moves here. Pound up 1.26%. Aussie, Kiwi had great weeks as well. This is the kind of price action we like to see. There are some weeks where we'll have this chart out and everything will be plus or minus 0.3, 0.4%. That's a garbage week. This is a really good week, and this is a really good predictor of where we're going to see volatility next week. So I like this week's trading opportunities quite a bit. You can see Ethereum was the best of the cryptos, but they're all pretty much up. But Litecoin was outperforming when everything was going lower. Now it's underperforming when everything's going higher. I think you really want to stick with Bitcoin here, and we'll take a look at that chart specifically. All right, so we already took a look at the equity markets. Let's take a look at the bond market. And a lot of people were confused in the fact that, wait, we got a rate cut here and bond yields went up. Remember, the markets are trying to price everything 3 to 9 months in advance. This drop in bond yields from here to here, this was simply the anticipation of a 50 basis point cut. So once we got it, as Ankit said, it was a little bit of buy the rumor, sell the news, and we had a little bounce up. 370, that is a really nice rate as far as what equity markets will like to see. So I do think this is definitely going to support higher equity prices. And here we have cryptos, and this is our crypto basket. 4 cryptos we trade, equally weighted. And you can see overall, it really hasn't gone anywhere. It's traded in a range, but we are starting to see some things change here. We are seeing the 20-period moving average is starting to turn. Now look, it turned here as well, and we got a turn in the 50 here. So I think it's premature to really get bullish on cryptos here, but the signs are starting to show up that the cryptos are turning and could possibly start a new bull run. We will definitely be keeping an eye on the cryptos as this progresses. Taking a look at next week, we've got some manufacturing data out of Europe and out of the UK. The pound is my favorite trade for next week. We'll take a look at this on the chart. We do have RBA coming out. They are not expected to do anything. And remember, the RBA actually said that rate hikes are still on the table in the last meeting, which really kind of shocked everybody. Likely not going to do anything, but if you are trading Aussie, you definitely need to be watching out for that. We do have the Aussie CPI coming out later that night. Again, I do like Aussie after this report because there's a lot of news out there getting it to move. And then for our second central bank, we do have the Swiss National Bank. Remember, they only meet 4 times every year. This is one of them, and they are expected to cut rates. They've already cut it twice, looking to cut it again. I think Swiss franc is going to be a great trade this week as well. So 2 central banks, and we've got some decent economic reports. Let's go in and take a look at everything and score it from +3 to -3. I'm going to start off with the cryptos. Now, as I said earlier, the crypto basket as a whole, it doesn't look like it's ready to go yet. When I go into individual cryptos here, you can see the Bitcoin has been basically sideways, trading between 54,000 and 65,000. We are definitely up near the top of the range. We are starting to get some signals here. We got the 20 moving average starting to cross up. The 50 is flattening. If we see these cross and break out above 65,000, that will be a pretty good signal that Bitcoin is likely headed to its testing its all-time high at 71,000. So for me, Bitcoin is very interesting, but it's not there yet. I need a little bit more confirmation and a breakout above 65,000. If I take a look at all the other cryptos, you're going to see they just don't look as good. I mean, this one's still hanging out around its moving averages. Ethereum, not looking great, even though it's had a nice little bounce here lately. It looks the worst of all of them. I mean, we're trading closer to the bottom of the range than the top of the range. So for me, Bitcoin is going to be the one I really focus on. And Litecoin, it hung in the best as things went down, but it's also lagging as things go up. You can see moving averages crisscrossing, flipping on each other. Not a great trend here. So we're going to really focus on Bitcoin in the cryptos. Not ready yet, but I think we're getting close to a point where we'll be ready. Ankit, take us through the Forex, please.
Let's just begin with the US dollar. Well, you can see that nothing really has changed with this one. Maybe what we can see that the velocity has really slowed down. We are not really seeing a big breakdown in the US dollar. And I think that's just the theme of it here. I mean, we had all that catalyst this week for this to break down lower, but it hasn't. So again, now the question is this just still going to be in the consolidation phase? Or is this going to be a delayed reaction? I think the dollar likely to consolidate here because, again, the news is out of the way. And the only thing that can help the dollar is if the economic data comes out a little better than expected. So I think, as the Fed has said, the economic data is really going to be in focus here. So if the economic data is good, employment data is good, I think that's just going to, add help the dollar a little bit than hurt it here. But I don't really like the dollar here going to next week.
And Ankit, I think one thing to point out is there is no U.S. economic data on the calendar for this week. So I'm with you. I think the dollar consolidates before it heads a little bit lower, but you hit it on the head. I think the velocity is going to really slow down. I think there's going to be other currencies that have much better velocities.
Absolutely. And, talk about velocity. If we go into the yen, well, you can see that this thing, again, yen in general has been a very volatile and great currency to trade. As you can see that the trend score, and we talked about, taking exit when you are seeing some signs, this is it. We are below the 20, we are below, right around the 50 here. So last night, everything was looking strong. The Bank of Japan, they didn't make any change, but, they did speak and, they sound, less urgent to really hike rates. So that really brought the expectation down for them to move at all. It seems like with this volatility in the dollar, it has already helped the dollar yen currency pair quite a bit. So You can see that the velocity has gone down -3, and trend is now moving lower as well. So I'm no longer bullish on the yen here. I think yen can either stay within that range, or if it breaks below that to a 50-day moving average, could turn a little bearish as well. But I would love to see sort of a lower high and a lower low to really confirm that change of the trend. But yeah, definitely something to note here. I know some traders have been doing really well on the long side of the yen, but I mean, this is where you need to change when the market changes. Now, let's talk about what's really moving here, and I'm excited for next week is the Swiss franc. I mean, you can see that this thing has been consolidating for some time. And in between, we've had rate cuts. The last, like Rob said, there have been 2 rate cuts already, and they're going for another rate cut going next week. And usually, we start to see the price move ahead of it, and we can already see that in today's or this week's price action, where on the upside it was very minimal, but then when it started to roll, it was much bigger. So going to next week, I think it's going to continue putting pressure on the Swiss bank here. Remember, once the U.S. moves, all the other central banks gonna move, and I feel like that's really where everybody needs to focus on in the upcoming meetings, where it's not about hawkishness. I think it's more on the dovishness side, just matching what the FOMC is doing. So they're expected a rate cut, and again, price action this week. So I really like Swiss franc short going into next week. And talking about his counterpart, euro. I mean, look at that. Euro is doing much better than Swiss franc, and I think it takes us to that opportunity when we take a look at euro Swiss franc pair. But you can see that we for the longest time we've seen the euro underperform, and we've seen the Swiss franc outperform. And we're seeing that change here, so I think we need to continue watching that change, and go with the weakness in the Swiss franc rather than the strength, especially if this market stay positive. I think there's just not a whole lot of risk-off sentiment here that really helped the Swiss franc. So far, I think I like euro much better than the Swiss franc, based on the scores. Now, the British pound, out of all, again, looks the best. And I think this is where maybe you will take a look at pound Swiss franc as well. This thing, we talk about how things go range bound, and once they break, that's really where velocity picks up. And you can see that. We have been range bound for the most part, and here we are getting that breakout in the last day or two, and the velocity is picking up. And you can see that the price action is staying. There's not a whole lot of volatility, which is again telling me that there's a lot more room for this to run higher. We already have Bank of England behind us. They didn't cut rates, so far I think that's going to benefit the pound here. So I really like pound going next week, especially the pound Swiss franc. Now, let's talk about things that are kind of gone sideways, which again is very similar to what we're seeing with the US dollar, is the Canadian dollar. Well, they're expected to cut rates again. There were more expectation as soon as the US cut rates by 50 basis points. Right away, there was expectation that the Bank of Canada is going to do another 50 basis point as well. So overall, again, nothing's really helping the CAD. But at the same time, it's not really falling apart. I think it's just due for a correction base here, or a sideways base. I'm not looking for, even though the trend is pretty bearish, I think it's going to consolidate here, and maybe perhaps other currencies will start to pick up in activity. But overall, I still like it on the downside. But for now, dollar and Swiss franc next week is not really my focus to short those currencies. Now, going for the long ones, take a look at the Aussie. You can see that the Aussie has been, trading within that range. Overall, the market sentiment is following the market sentiment, which is on the positive side. Now, I think RBA is going to be a tricky one next week. Like I said, I like the trade here for currency weakness off of these central bank announcements, especially if they do come out and take their hawkishness back, or they talk a little bit more dovish. I think there's a more risk there. So I think right now there's no expectation for them to cut rates, but at the same time, I think they will be talking about it since the U.S. has made that cut. So I think this is going to be a tricky one. I actually like Kiwi a lot better than the Aussie, because they kind of look similar. But if you take a look at Aussie Kiwi currency pairing, you'll see that it's sitting at a decent level where maybe one can start to deviate from the other. We have no news on the Kiwi. We have news on the Aussie. So I think you got to watch out for the Aussie going next week. But I think Kiwi looks much clearer to me here. So overall, as you can see, it's all about focusing on the right currency. Whatever is moving, that's what we're going to focus on. And I think that's what we got to make a shift and focus on things that are likely to move next week, while other currencies might take a bit of a backseat or consolidate. Back to you, Rob.
Thanks, Ankit. And one of the things I want to point out is over the last really month probably, we've been having a lot of scoring in the middle here, in the +1, -1. And we always talk about, look, these are the times where traders tend to churn themselves and just get stopped out after stop out because nothing's really trending. And so we always talk about at Maverick, energy. You want to be trading when the market is giving you lots and lots of +2s and +3s. That's telling you that there's trends that are happening. When there's a whole bunch of stuff in the middle, it's kind of a little warning sign of, hey, trade less, not more. Things aren't going, and when they're breaking out, they're failing. So right here is really good to see that we now have 3 currencies on the downside. We've got 3 Forex on the upside, and we've got some cryptos that are looking decent as well. So this is telling us, hey, this could start to be a nice trend here. And then look at the velocity as well. We've just been bunched up in this area for the last month or so. Now we're starting to see things really move. This is where, as traders, we want to now look to increase our trades. Again, you don't want to go crazy, but just these are the moments you wait for. You know, as a trader, you're waiting for those moments to come, and you're trying not to force it when it's not there. This is that moment. That moment is here. So let's take a look at some crosses. And Ankit, you hit it right on the head. Pound Swiss franc looks great. I'm going to take a look at pound yen as well, and then I'll have you take a look at some of the others. Let's start off with that pound Swiss franc. All right, so we've got, again, this is the daily chart. We came down here, we had a bounce up. We spent a lot of time just basing here with a breakout. So the question is, where is this next level of resistance? I'm going to put it right here where we had a little bit of resistance here, turned into support, bounced here. So I'm going to call that 115. So we are at 113.25 at the moment. That's giving us 175 pips to get up to that 115 area. I like the trade, so now it's just a matter of timing. When is the timing? And you can see this thing is off to the races. One of the most difficult things as a younger trader is to catch a trade that's already off to the races. Now look, we all try to catch the trade before it's off to the races. And then once it's off to the races, it's very comfortable. Now we're looking at this saying, oh, I want to pull back. I want to pull back. Sometimes you don't get pullbacks. And when you have this longer term breakout happening, you're like, okay, well, I need to get in it, but I can't just recklessly just dive into it. I need to have some discipline of how I get into it. So traders wait. And what happens is they wait and wait and wait and never get that entry. This is where I absolutely love pyramiding. Pyramiding to where you say, okay, well, you know what? I need to get into this, or I shouldn't say need. I want to get into this. It's not giving me a great setup, but it's likely to keep running and it might run away from me. How do I trade in spite of all these things? I can't just be impulsive. I can't just jump in it right here. Well, this is where you have this binary choice of wait for a pullback or just jump in now. Binary choices are very difficult to make because there's a lot of consequences. So I always say, don't look at trading in binary situations. Look at it in, okay, how about I take a third of my position here? I take a third of my position here with a wide stop, and then if I get a pullback, then I can add in another third. Or if it does run for me, at some point I'm going to add in my other third, and I'll have a much better cost basis, and it'll be much more comfortable being in the trade. So I think this is one of these where if you are sitting there trying to wait patiently for pullbacks and bases, you may miss it. So I really like the position management strategy of getting into some of your trade and then being able to build into it after. Now, pyramiding works best when you have multi-day moves. So multi-day moves are necessary for pyramiding. So the question is there going to be a multi-day move? And look, we have had a base for a month and a half. These are the kind of moves that typically do last for a couple of days. So this is pound Swiss franc. And look, and I don't hate pound yen short as well. It doesn't look quite as good on a daily chart. You can see we are going to have a little bit of resistance, basically right where it is, maybe a little higher. Yeah, I would wait for this one. I definitely would wait for this one. If I'm looking at trading between pound Swiss franc and pound yen, I think this one makes some sense to wait for this 194 to break out. Then I think it's a much better trade after that. So that's really what I'm looking at, Ankit, is just pound Swiss franc is just looking fantastic. What do you want to take a look at?
Hey, Rob. Well, I think we're on the same page here. As pound Swiss franc looks like an obvious choice here when we look at the charts here. The next one we can take a look at is Euro Swiss franc, which is again a similar trade. We're just looking at the next best one, and you can see that this thing is sort of turning the corner here as well. So again, not as bullish as we take a look at the pound Swiss franc, but remember this has been below that $1 area, the parity for the longest time. So I think maybe this thing can sort of make a turnaround in the shorter term. So I'm looking at this trade as well, just looking at that proxy here. So those are the two that really stand out to me here. And again, we can also take a look at euro yen, pound yen, again on a very similar note here. And then they kind of look similar. And the last one that I would want to take a look at is Kiwi Swiss franc. What if the Kiwi is the best currency next week? Looks like a very similar pattern to me, Rob, as you take a look at pound yen. The only difference is that this is not broken out yet. But you can see how discounted, Kiwi is against the Swiss franc here. So if the Swiss franc backs off, I think maybe there's a chance for this to, have a meaningful break, above that 50, above that area that, heading towards that 55, 50 area. So there's a decent risk to reward on this one. And those, the ranges are pretty manageable. They're not too wide here. So Rob, those are the ones that I really like here. But as we go next week, again, we'll take a look at it. But yeah, want to take a little break from the dollar crosses, the CAD crosses, and then kind of move into these currency pairs.
Thanks, Ankit. And I agree. I think the dollar's been a good trade, and it still might be a good trade, but I do think we're starting to see the other currencies come into play. So we always want to go where the energy is as currency traders. If the energy is now over in the euro currencies, we're going to play those. Once they get into the Aussie Kiwi, we'll play those. We want to be constantly looking and analyzing where the strongest trends are, because that's where we're going to make the best trades. So remember, 2 central banks this week. If you're trading Swiss franc or if you're trading Aussie, make sure that you're aware of that. Everyone have a great weekend. Take care. Goodbye, everybody.